Fair value gap, liquidity sweep, and displacement are ICT concepts everyone is talking about right now. In this video, I want to show you how I have integrated them into my trading. Basically, ICT techniques with a twist. And answer the question, could you have entered a swing trade according to these rules around the absolute lows? As examples, we will have a look at the NQ and also at BTC. So stick around and I'm sure you won't regret. What does the typical ICT setup look like? Imagine we are in a downtrend. The first thing you want to look for is a high time frame level. This high time frame level should now be swept for liquidity. Once this has happened, look for displacement, meaning a market structure break. The more violently the displacement, the better for you. Next, wait for the retracement. The retracement should take price at least to the discount area, meaning below the 0.5 fib level. Before that, you will not consider a buy. Combine this now with the typical fair value gap and you've got the perfect ICT entry setup. Now, what does this model look like in real life? Let's look at it on the charts, and there I will also add my own personal secret sauce that I use, meaning my target boxes, my squeeze deviations, and the double momentum that I use for confluence. So let's start our little experiment with the NQ and look at the period in question mid-October 2022. One major level, of course, you always want to have on your chart is the golden zone retracement. If you pulled your fibs from the COVID low up to the highs, you would have realized back then that the golden zone at around 10,532 wouldn't have been too far away. Adding to that, you could have marked out this weekly low because this is where you would have suspected a lot of liquidity to lie. Meaning you would have had a weekly low to be swept at around 10,650 and the well-known 618 fib retracement level at around 10,532. Having mapped out the higher time frame area of interest, you then first of all would have had to wait. So let's go down to the daily time frame and see what happened during the period in time that we are looking at. Forwarding the chart, we see that we would have hit our area of interest on the 13th of October 2022. As I mentioned before, once you are in your area of interest, you may go down to a lower time frame to limit the possible risk, to narrow down your entry as well. Depending on how much time you have and what kind of trader you are, you could, for example, pick the 4-hour, 2-hour, or even the 1-hour time frame. Let's look at the 1-hour time frame here today. Looking at the 1-hour time frame and the high time frame level of price that we were interested in, we can see that indeed the 1-hour chart did deviate below this pool of weekly liquidity and also quickly tapped the 618 Fibonacci retracement at around 10,532. Next, it violently displaced up and by that breaking market structure on the 1-hour time frame as well, just as we would hope for. This is also already the moment where I would add my first piece of secret sauce, so let's add it to the chart. This first piece of secret sauce basically is the so-called squeeze deviation. You see it marked out in gray here on the chart. Now, if you want to know in more detail what exactly a squeeze deviation is, then watch the video I linked to here. I have explained it in more detail there. In general, just know that it is the so-called Bollinger Band squeeze. Once such a squeeze occurs, especially around an area that you are highly interested in, you want to mark out the latest low and hope for price to deviate below it and then violently displace up, as we can see here. Once it has done that, we do, yes, what? Just simply wait for a retracement that may give us a possibility to buy in. So let's watch price and see what it did back then. It did indeed pull back. Now ICT expects price to pull back at least to the 0.5 fib, meaning his discount area. Personally, I prefer price to retrace even a bit further. I call it the target box, my target box. And how do I describe my target box? It starts at the 618 fib and it goes down to the 786 fib. Yes, you may from time to time also miss a move by using such a target box that requires a diva retracement. However, at the same time, if you get it, you minimize your risk, obviously. With that, we are already also looking at my second piece of secret sauce, my target boxes between the 618 and the 786. For his typical entry setup, ICT also requires a fair value gap. As you can see here, we did indeed have a fair value gap lining up is also with my target box. Now let's add my final little secret ingredients, which is the so-called double momentum. What am I talking about? Simply, I'm talking about low momentum on the stochastic and also on the stochastic RSI. Yes, I know it is simply an indicator based on price action and it can stay overbought for quite a while. Nonetheless, in my experience, if you have all these factors lining it up, meaning a higher time frame level that has been swept, deviated below a range because it is nothing else than a range, a squeeze deviation, then displaced up and returned to your target box, lining up with a fair value gap. In this case, definitely if you add on double momentum, this will heighten your chances of success. This is my experience. So let's see what would have happened if we had taken an entry on the 1 hour time frame here with a limit order. We would have had to suffer a little bit, but then price really would have shot up. Let's zoom out a little bit to see clearer what would have happened back then. I'll go back to the 1 hour time frame and let the chart play out. Here you can see that yes, indeed, we would have come back one more time to our entry area, but obviously if you are entering a swing trade based on the sweep of a high time frame area level, weekly liquidity and the golden zone retracement from the COVID lows, then you would have put your stop underneath the daily low and no closer, and then you wouldn't have been in danger. Another possibility would have been that you take some profit up here and then maybe even add on to the position, for example, on this retracement, meaning on the 9th of November. Keep in mind, 9th of November, absolute low on BTC. Do you see any correlation here? Yes, of course you do. And this is what you would have been rewarded with if you had stuck in the trade for a bit more. Right guys, looking at the chart of BTC here, let's repeat our experiment one more time and see if this pattern just simply repeats like that over and over again. Also, if you've learned anything new in this video so far, then I'd be happy if you helped me out and subscribe to the channel. Doesn't cost you anything, but helps me a lot. Again, the first thing you would have wanted to do in November, looking at the monthly chart of BTC, is identify possible high time frame levels that you would want to do business at. For that, you could have pulled your fips again from the 2018 December lows up to the high, and you would have received the 786 at around 15,800. Looking more closely, you would have identified a monthly fair value gap, huge fair value gap, from 17,600 roughly down to 14,200. And going even more into detail, you could have realized that the midpoint of this fair value gap was right on the 786, meaning 15,800 really was a number to look out for. Moving down to the weekly, you then would have repeated the process one more time. You would have pulled your FIB retracements and realized, wow, they seem to line up very closely. 16,510 would have been the 786. Finally, you could have also identified this daily liquidity pool at around 16,100. Let me quickly show you where this stems from. For that, obviously, we need to zoom in a little bit. And you would have realized it's not any liquidity pool, a liquidity pool that formed before we broke the old all-time high and made our run for the all-time high at around 64,000 in April 21. So you can see this area definitely would have been an area that you would have wanted to pay, or hopefully did pay attention to, in November. Now let's press forward and see what price did around these price areas. For that, I will zoom in a bit more into the daily chart so we can get a better look at it. And we realized that indeed we did hit our levels of high interest, especially here on the 9th of November, hitting the 786, hitting the midpoint of the fair value gap, and also hitting the daily liquidity zone. All happened on the 9th of November. Looking at price action in November on the daily chart, we realized that we didn't just interact with our major levels of interest once, but several times. Here on the 9th and 10th of November, again on the 14th, and again on the 21st and 22nd of November. For really actionable setups, you want to move down to a lower time frame. We already know that. For cryptocurrencies, I recommend that you stick to, for example, the 4-hour time frame. Don't go too far down in time frames because it is moving so fast and it might get a bit sloppy, especially if you have a full-time job besides trading. Let me get rid of some of the things on our chart. We don't want to clutter them. We still have the major levels that we are interested in on the chart. And now let's zoom in into the 4-hour time frame and also put on our cheat sheet indicators to get a better perspective. Yes, in hindsight, it is clear you would have wanted to enter around here. Why? Because you were deviating below this low one more time and you had this nice pullback again before really taking off. However, as we all know, hindsight is 2020. So how could you have known back then when to enter for at least a midterm swing trade long? Well, you simply would have followed your checklist. Let's go through it first of all. Interaction with our major level. Where is the lower high that we want to beat? Here at 18,500. It wasn't even interacted with for a long time. So what would you then want? Well, actually you would hope for another lower low, and you get it here. All of a sudden, the lower high you want to interact with is this one. Secondly, do you have a squeeze deviation before interacting with the low here? No, you don't. However, once the squeeze starts to form, you know that you want to try and beat this low. What happens over here? we get the deviation we are looking for. So really, if you look at it more closely, everything was lining up around the 20th, 1st and 22nd of November. Interaction with your major level. Secondly, squeeze deviation, and no matter whether you take this low or that low, you deviate below it. Then next up, violent move up, displacement, creating what you all know it, a fair value gap on the 4-hour time frame. Finally, what do you need to enter? You need a pullback. Take your fibs, put it up to the highs, wait for the pullback. What do you get? You get your target box on the 4-hour time frame, and all of this on double momentum. You would have entered with a limit order on the 28th of November at around 5 o'clock. I know in hindsight, looking back at things seem really easy always. However, this is exactly the lesson that we have to learn. We never know what is going to happen next in trading. This is why you have your clear-cut rules, and this is why you follow your rules, and if they tell you to act, you act. So what would have happened if you had acted back then? Let's zoom out to the daily chart one more time and see. Let me show you. Back on the daily chart, you would have been inside of this move. Guys, I hope you could learn something today here. I hope that you like my ICT techniques with a twist. And if you do, then please support the channel, leave a like and subscribe. This really helps me and doesn't cost you anything. Bye bye and see you in the next one.